Well, hello and happy Friday, everyone. In the pre-market hours here, we're getting a bit of a bounce looking at the stock market itself, but also the crypto market. We're going to talk about XRP and also Bitcoin to take a look and see what exactly is going on there and to see how the technicals are playing out. So this is a fairly important update that I have for you in this video. So without further ado, let's get right into the charts and talk about how we're getting set up for the end of this week leading into the next week. So first chart that I have for you, we're going to kick it off with SPY. Boom, put this up here. So this is the daily chart that we're looking at, and you can see we're down below the 200-day, and we haven't had a green candle since Friday of last week. So perhaps this Friday is that time that we finally return back to that green territory. Let's keep our fingers crossed and see that that's what we get. So let's hope that we get a bit of a recovery after yesterday's 1.33% down from the previous day. So we got to make it back up above that 200-day, the 20 down over the 50, not a great sign. If we see the 50 cross over the 200, if that starts to come into play, that's a death cross moment, which can signal a further sell. And by that time, we would see a fair amount of pain already. The question does come out, okay, well, how far does the market go down? And I just wanted to share this interesting view with you from QQQ. So this is tracking the NASDAQ 100. And if we look back here, from the October 2002 lows. So we're looking at the monthly chart here. We had on a Fibonacci retracement basis to the peak before the Great Recession, all the way down to the trough of this thing. We actually crossed over the 786 before finding a bit of a recovery. So we always refer back to this reference point, by the way. Moving on to the flash crash of 2015, we actually punched down through the 23.6 Fibonacci retracement level after the peak. And then when we look at the Fed rate raises and the recession fears that came in around 2018, that pulled us back to the 236. COVID only pulled us back to the 236. Supply chain fears, runaway inflation fears, Fed rate raises, you name it, from the late 2021 peaks throughout the end of 2022. What was that like? That when we pulled back to the 382 level. So what does that mean moving forward from here? Well, if we're going to continue forward with some big old scary narrative about recession and inflation fears, we have the 236 and the 382, again, referencing back to the October 2002 lows. When we look at this one, and that produces these two price targets where we could potentially find bottom if the sell does happen to continue. And once again, this is not a super bearish video. What this is just talking about where we could potentially see things going if we were to continue to sell down that far. Hopefully, a recovery is what we find instead. So those price targets, if I put these back up here for you, you can see the prices that come out of 417.84, so about 418, which would be a fairly painful fall from where we're at right now. So we'd be looking at, let me see, another 10 to 15-ish% down from where we're currently at. And from the peaks already, we are already down a fair amount from that. So let me turn on the magnet tool there and click peak to trough on this thing. Are down 13.75%. I think that me, among many other people, are already done with feeling that sort of pain. We like those bullish movements, and so does the market. Having an overall bullish bias over time, you can see that take place. So if we were to sell down, one of the first places we could look for 1784. I would think that things would have to get really, really, really bad, like with evidence, not just narrative-based, but also evidence-based of something with inflation, recession, maybe pushing us into deflation with continuing evidence being stacked on top of it, that we start to see that the destabilization of the labor market intensify or something like that. So I don't think that, I don't know that narrative alone. I think we would have to have some evidence to keep pushing us this way down to the 417, 418, getting all the way down to 342, which would push us down below this peak that we had in 2021. I think that there would have to be some significant evidence, not just narrative-based movement that we would get from the market on this one in order to push us down that far. So either way, it's really painful. But after that pain, if we were to come down either of these two levels, we could be looking at those two levels for that potential bounce zone in order to take place. Based on these previous bounce zones that you see, that the Great Recession, 0.786 versus all the others, which are 236 or 382, that's what I want to look for here in terms of preparation, coming back to either one of these two levels, that should we get down that far, we could really start to expect that at one of those two levels, unless something got really dark, really bad, and then we'll address that as it comes along. These would be where I'd be looking for that massive and mega opportunity to come in, where we just start to see those really rampant rallies that really outperform And that's what I'm looking for mostly here, is preparation, that should things go that way. Let's go down to the daily chart on this, and let's talk more recently, because in the pre-market hours, we do have a bit of a bounce. We want to watch and see what happens with this 200-day. Can we get back up to it? And if we do get back up to it, can we push above it? More near term, that's exactly what we're looking for in the charts here for QQQ tracking the NASDAQ 100. If we move over to the IWM tracking the Russell 2000, this handle part of the cup and handle, let's go out to the weekly chart so you can see it. There's the cup and handle. Now, mind you, we don't want to really drop down below the 0.5 Fibonacci retracement level. Well, we have 0.618, maybe we get that down that far, maybe we don't. We're down below the 200 week, but pre-market hours pushing us right back up against that. So in this handle part of the cup and handle, which is not confirmed unless we break out of the top of this handle, we could be set up for some sort of recovery here as well for the Russell 2000 stocks. So we need to watch and see. The inflation reports came in not so bad. And so really then it goes into the hands of the Fed. What exactly is the Fed going to say about monetary policy? Are we going to find Jerome Powell still giving that Jerome Powell scowl? Or is it something that he's going to come out a little bit more dovish and signal that easy monetary policy is coming? In my opinion, it's probably a little bit too early for that. But if he does come out and say that, that could be the levity that we're looking for in the markets. That could be that release of downward pressure that allows us to experience some recovery. And I believe that next week is that meeting. So let's take a look at Bitcoin, because Bitcoin, once again, is going for round 5 with this orange 200-day that's coming up across the chart here. So if it's able to do that, so let me take off some of these other values so you can see this a little bit more plainly. This orange 200-day coming up 1, 2, 3, 4, 5. We're on potentially the 5th retest here today. Maybe we get up there for Bitcoin. And by the way, if you haven't seen the drones making the Bitcoin logo in the sky above Austin, you should look it up. I'm trying to think. Gemini was the one. There you go. So Gemini, Bitcoin, Austin, drones. You can try and search that. It looks fake. and honestly, like, I haven't taken the time to confirm it. I'm pretty sure it's legitimate, but it looks like it just seems unreal that there would be like a drone-based sky billboard that would be able to do such incredible animations. So check that out if you get the chance to do so. And so for Bitcoin right now, a little bit of recovery that we're coming off this bottom support line right here. Losing that is the next critical support to lose. So if we get rejected again at the 200, watch for that support. If we come down around 76,000 per BTC, getting back up above that, we have the 20 to contend with, and that's a perfect transition into XRP, because XRP right now, mind you, a little bit more news in terms of the SEC battle that that Ripple has going on with them, leaning more towards commodity once again rather than security, which would be a very good thing. So more of a medium of exchange point of view, easily tradable sort of thing, rather than being securitized for XRP. And that would take a lot of other downward pressure off. That would certainly bring back some certainty to the price action that we have going on with XRP, that they wouldn't face further sanctions, and that it would be just one step closer to regulatory approvals. And then that also could mean that it's easier to get over to an ETF side of things. So if it goes more commodity like Ethereum, for example, then maybe it helps pave that way towards the ETF and we see further upside. Now we're above the 200 for XRP. I said if we hold support here, you can see this orange flag that we have. As a matter of fact, we're going to turn that green because we have confirmed that that's support for us. There we go. We have resistance up here. I said we have to watch the moving averages, the 20 and the 50. Right now, the blue 20 yesterday got rejected. Today, retested, getting back up on top of that. We have green lights to go ahead and retest the 50. So we want to keep on watching, keep on looking for that upward pressure to keep on taking place, because we absolutely want to refute as much as possible this head and shoulders pattern. Maybe we see that better in the daily chart. There we go. So an unconfirmed head and shoulders on XRP, we want to see this right shoulder get broken, because we don't want to see that price get collapsed or pushed down any further from right now. So left shoulder, head, right shoulder. If we're able to overcome this peak that's right here, we get to cancel the pattern, and then we could look for potentially more green lights happening that we canceled the head and shoulders that we could potentially be seeing. If we do happen to hit that, price target would say about 54 cents, but we have so much support and we have so much momentum going for the crypto markets, we would have to hit some sort of massive risk-off environment, in my opinion, in the stock market, in the crypto market combined in order to see that happen, like a true flight to safety moment happen before we would have that sort of price collapse. So that's my opinion on it. I don't think that we get down to that price target. If the head and shoulders gets confirmed, I think that we would fall short of it instead. So I think, like I said, tons of support on the way down. You guys can see those prices on your screen, and you can also see those support areas also being established. And so even though the technicals would suggest that we would come down to 54 cents, I think we'd be hard pressed to get there in the first place. So where are we looking at as we go into the trading day Friday and into the weekend? As of right now, the pre-market is signaling that we could be experiencing, maybe we have some closing, some short positions, not to sweat that weekend risk. That could be some of what we're seeing in the pre-market. It's hard to tell from the pre-market, but we do have the Fed meeting coming up. I believe that it's next week where we get that interest rate decision. And if we do, and really we're looking for what Jerome Powell has to say, most likely we're going to stay right where we're at, where we are at in terms of the federal funds rate. Should there be any signs of easing or aggressiveness to ease for monetary policy, just some sort of tone shift for what Jerome Powell is saying, that could be very bullish for the markets, at least in the near term, as long as it doesn't also spark further recessionary fears. If instead that gets sniffed out that, hey, Jerome Powell's only being easy about this because he thinks that things are about to go into the toilet, that could also send the market, that could put a lot of downward pressure on if it's a recession that gets the narrative instead of just a more dovish Fed coming at it in general. So we do want to keep our ears open for what's being said there. We have a lot of reasons to be hopeful, and then we have some things to do just in case that hope turns into a big old pile of poo-poo instead, and then we end up selling down. We want to look for where exactly those potential bottoms could come in, so that way it sets up our next big opportunity. We start to look for those signs of reversal. So that's exactly what I'm going to do. I'm going to keep bringing it back here to YouTube. Hit the subscribe button so you can see my videos as they come out. If you want to see more of my technicals, if you want to see a lot of trades going out by a panel, the expert panel over at the Discord, you can come and join us over there. The link's down in the description. You get to save 50% on your first month sign up by using the code word CASH. And if you guys want to learn to do more with trading, with technicals, with options, you can do so using the link for Stockmo Academy down in the description. Click on that, sign up, use the code word DOCTOR. That's going to save you a ton of cash as well. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.